Welcome to Finsight News, your go-to source for global business, finance, and economic news. Today's story is about one of America's most iconic fast food chains, Wendy, and a sweeping restructuring move that is set to close hundreds of its U.S. restaurants. This decision is reshaping not just Wendy's business model, but also casting light on the broader competitive landscape in the fast food sector and the economic challenges facing companies today. On November 7th, Wendy's announced plans to permanently close between 200 and 350 of its underperforming U.S. locations through late 2025 into 2026. This announcement came during their third-quarter earnings call and was characterized as a major part of a turnaround strategy aimed at streamlining operations, improving profitability, and allowing franchisees to focus investments on stronger locations. The company's interim CEO, Ken Cook, stated these closures represent a mid-single-digit percentage of the roughly 6,000 Wendy's restaurants in the United States, signaling a significant but strategically targeted retreat. Closing underperforming restaurants is expected to enhance overall system health and boost sales and profitability at the remaining outlets. Despite the closures, Wendy's reported modestly positive financial results for Q3 2025. Earnings per share came in at $0.29, exceeding analyst expectations of 25 cents. Their total revenue for the quarter was about $560.9 million, slightly above estimates. The company also maintained an impressive net profit margin near 8.6%, underscoring efficiency in parts of their operations. However, U.S. same-store sales declined by about 4.7% during that period, a key metric that underscores the struggles some of their outlets are experiencing. These downturn, paired with rising labor and food costs, has placed pressure on profit margins and franchisee sustainability. Store closures primarily focus on locations consistently underperforming their sales and profitability targets. Many of these restaurants operate in highly competitive markets, with intensifying rivals like McDonald's and Burger King, investing heavily to capture and retain market share. Franchisees running the shuttered stores face growing operational costs, including wage inflation, supply chain disruptions, and evolving consumer preferences leaning more towards digital ordering, delivery, or healthier options. Wendy's management expressed they intend to work closely with franchisees affected by closures, aiming for reassignment opportunities where possible. But some redundancies are inevitable. Wendy's turnaround plan, known as Project Fresh, involves several pillars, including brand revitalization, operational excellence, system optimization, and prioritizing capital allocation more effectively. Recent menu innovations like the new line of chicken tenders have been rolled out amid this plan to attract customers and boost traffic. Wendy's also focused on improving the customer experience through better digital ordering platforms and delivery options. Crucially, the company believes that by removing underperforming stores, this will free up capital and managerial focus to invest in the highest potential locations, ultimately increasing average unit volumes and system-wide profitability. Wendy's closures highlight a broader challenge in the U.S. fast food industry, balancing expansion with profitability in a mature market. The fast food space faces increasing pressure from elevated input costs, labor shortages, and shifting tastes toward sustainability and health. Rivals like McDonald's have also refined their store portfolios over recent years, while investing heavily in tech for mobile ordering and contactless service areas. Wendy's aims to catch up on. Moreover, consumer demand is diversifying into fast casual options and delivery, requiring traditional chains to adapt or consolidate. News of the closures had mixed reactions in financial markets. Wendy's stock experienced a brief dip following the announcement amid concerns over lost locations and workforce impacts. However, some investors are optimistic. The move will shore up longer-term margins and provide clearer growth path. There is strong interest in the company's ability to execute Project Fresh effectively. Market analysts underscore that Wendy's must not only improve operational efficiency, but also innovate its menu and embrace digital transformation swiftly to keep pace. Beyond corporate finances, these closures will have tangible social and economic impacts on communities across the U.S. Hundreds of franchise locations closing means job losses and disruption for employees, many employed in urban and suburban settings. Wendy's has not yet disclosed detailed information about specific locations or the full extent of the workforce affected. However, the company indicated efforts to reassign some workers and minimize redundancies where possible. Franchise owners must navigate this turbulent period carefully, balancing immediate financial pressures with the long-term sustainability of their businesses. Wendy's is set on shifting towards a leaner and more focused business, emphasizing investments in high-performing sites and customer-oriented innovations will define its near future. The closure wave is a painful but arguably necessary step in repositioning the brand. If executed successfully, Wendy's could regain competitiveness and appeal to younger demographics through digital enhancements, menu creativity, and improved service delivery channels. This story offers multiple takeaways for investors and companies alike. Strategic pruning of underperforming assets can be vital to long-term profitability. In fast-moving markets, agility and customer-centric innovation define winners. Rising costs and economic uncertainties require tight operational control and flexibility. Brand revitalization must integrate digital transformation for sustained growth. Wendy's closure announcement signals the tough realities facing legacy brands in challenging market environments. The company's turnaround plan is full of promise, but risks remain substantial. For franchisees, employees, investors, and customers, the coming months will be a test of resilience and adaptability. Stay tuned to Finsight News for ongoing coverage on market impacts, strategic shifts in business, and key financial developments shaping the global and American economy. If you found this video insightful, please like, subscribe, and hit the bell icon to keep updated with the latest in business and finance. Share your thoughts on Wendy's move in the comments below.